I'm Gifford Gomes, and I'm here with my colleague Paul Ffolkes Davis. We're both members of the investment advisor to the Nippon Active Value Fund, or NAVF. NAVF is a London-listed investment trust focused on identifying undervalued opportunities in the Japanese stock market. Over the past 5 years since launch, it has delivered a return of over 110%. Our key differentiator is that we have a team on the ground in Tokyo and have been operating there for over 25 years. We seek to buy undervalued companies that have large amounts of cash, probably property on the balance sheet, cross-shareholdings, and we believe are undermanaged. And we seek to work with management to improve their capital allocation over time. But before we go on to recent performance, let's talk about something that's in the news right now, and that is the Trump tariffs. Paul, how is that going to have an impact on the portfolio?
Well, it's a lot of fun, isn't it? Trump's tariffs have affected all markets quite profoundly, and they've been very volatile since he made his announcement on Liberation Day. And Japanese markets have not been able to avoid that any more than anybody else. It's ironic because one of the effects of what he's done, apart from the whipsawing markets, is he's considerably weakened the dollar, and this was already underway in Japan because even before the administration launched the latest excitements, the Japanese authorities were starting to raise interest rates, and this was having the effect, which we've long been expecting, of strengthening the yen. So one of the things I think that may come out of the whole tariff shenanigans is actually the yen will continue to strengthen, albeit maybe the Japanese authorities will not be in such a hurry to raise rates. We'll see.
How does currency affect NAVF's portfolio?
Well, there are two responses to that. One, in terms of the fundament of the portfolio, is not very much, for reasons that we'll discuss in a minute, relating back to the tariffs and why they're not a particular issue for us. But two, in terms of outright performance, we've probably lost 40 to 50% of our performance because of the weakness of the yen. If it starts to make up a considerable part of that, and we have to hope that maybe it makes up half of what it's lost over the last 3 years, we should be looking clever without ever having done anything, which will be a good result.
And in terms of fundamentals for the companies, how do the tariffs have an impact?
Yeah, so what I was going to say about tariffs is we're not immune to the gyrations in the market any more than anyone else is, but there are two mitigating factors which really help the Nippon Active Value Fund. One, we're fishing in a particularly calm set of waters. Japanese smaller companies, particularly the kind of companies that we invest in, which tend to be small manufacturers or chemical companies, they are part of a larger supply chain for the most part, and that supply chain is Japanese. So their earnings are for the most part in yen, and they are not that much affected either by currency or tariff gyrations. And then the other mitigating factor, which of course is the most important, is that this is an activist fund. So we make our own luck. We engage with companies. We try and make them do things which are good for shareholders in terms of improving their capital allocation policies, buybacks, dividends, improving the quality of the board and its independence, all the things that help us make individual companies perform. So over time, since we get to engage with just about every company in our portfolio, we would expect that engagement process to mitigate any wider market forces.
So I take it from your comment that short-term performance is not a focus, but just remind us what has been the performance of the trust this year.
Okay, so this year we're up 3.21% to the end of March. It's okay, But it has been difficult to make a lot of headway when we haven't had yet the results of some of the engagements that we're currently involved in. This is a very busy time of year in Japan. Most companies have their AGMs in June. So we are in the process of sending AGM proposals to all of the companies in the portfolio. It's worth saying that the top 5 performers this year have been Fuji Media Holdings, which I might talk about a bit more in a while, Asuka Pharma, Icon Chemical, Teikoku Senai, and Hogi Medical. All those companies are companies that we're currently talking to ahead of their AGM season, and we're expecting things to happen in relatively short order. So performance to date is okay, but we would hope it will be more exciting in the next few months.
Those companies that you mentioned, with the possible exception of Fuji Media, are not exactly household names in the West. Is the fund particularly focused on smaller companies that are unknown in the West? Is that
ideally, yes, because they have all sorts of advantages. The Japanese stock market is incredibly broad, still over 4,000 stocks listed, and incredibly deep in places. But at the shallow end, the smaller companies end, there are phenomenal companies making very good products with very sleepy management, with far too many non-operational assets on the balance sheet, as you've already described, and which, from our point of view, get even better because they are not covered by Western media or Western research. So yes, we like companies that nobody else is looking at or focusing on, but are demonstrably cheap. We should never forget that Japan is the developed market with by far the cheapest valuations in the world.
So before talking about some of the more obscure companies, let's hear about Fuji Media, because that's been very much in the news. And could you give us a little bit of the background of how the fund came to have a position there and what its involvement has been with the board and the management?
Yeah. Fuji Media Holdings, one of my favorite stocks. We've been involved for about 18 months. We own about 7.5% of the company in concert with our friends at Dalton. And we were becoming, to use one of your favorite expressions, Gifford, stockholders. Here's a company that is probably the ITV equivalent in Japan. It's one of the biggest broadcasting companies, but it's protected by the Japanese Broadcasting Act, which doesn't allow foreign investors to own more than about 20% of the shares. Foreign investors can actually own more than 20%, but they can't vote more than 20%. And it's interesting that Fuji Media Holdings has currently got about 40% foreign shareholders. So it shows that it's an attractive company, and the reason it's attractive is it's dirt cheap, and it's a conglomerate. It's not really just a media company. Not only does it do its own production of dramas and reality and all the usual stuff that a terrestrial broadcaster might do, it also has a streaming channel. It has a hospitality business with hotels and restaurants, and above all, it has a property business, Sankei Building. And over the last few years, it has used the profits coming out of that division to subsidize the whole. And we were advocating for some while that we thought that this conglomerate should be broken up into its component parts, and they would be worth far more than it is as a whole. We were getting nowhere. This was a company that resisted all our blandishments. We had several meetings with them in their very impressive headquarters building. And then something broke. They mishandled a sexual harassment story relating to one of their presenters and a female employee. They had two disastrous press conferences, and we were able to start writing letters, not particularly focusing on this, but on the mismanagement of how they were dealing with this particular issue, and the fact that the company had been controlled for over 40 years by Mr. Hieda, who is now in his early 80s and had been running the business, although not chairman or CEO, but as an advisor to the board, almost as a fiefdom. And we were able to depict him as a dictator or an emperor. And this has created such a media furore in Japan and, in fact, around the world, that he has now stepped down. His old boys club of other friends and acquaintances have also agreed to step down at the forthcoming AGM. And there is now a fierce discussion going on, not only with us, but with other both domestic and foreign shareholders about the future composition of the board and the company's direction. Who knows whether it will be broken up, but things are happening, the share price is performing, and we are really quite enthusiastic about the future.
So the stock price is up. There's a lot going on in terms of the public outcry. What's happened to the business itself? What's going on there?
Well, I'd say the business is in crisis. One of the effects of the embarrassment about the sexual scandal, and B, how it was handled, is that the company's lost nearly all its advertisers. So revenue is severely reduced, and there is a general understanding, and I think management does understand this, that they have to come up with a new course and a new medium-term plan that everybody believes in if the advertisers are to return. And if they don't, then things will get really serious.
What's going to happen to the fundamental value in terms of its reflection in the stock price?
Well, it's one of those situations where you would expect the stock price to be falling or even collapsing. But because people believe that there will be a resolution to this issue and that management will get a grip, the stock price is actually performing pretty well. Company is still trading below book. The reason we got involved originally was it was only trading at 0.4 of 1% of book. It's a bit better than that now, but there's a long way to go. I should point out, of course, that the division of the company that is affected by the loss of advertisers is Fuji TV, and that is obviously the most famous part of this business and the bit that everybody is watching.
So, fund has been going 5 years. Would you say that the opportunity going forward is as strong as it was when the fund was started?
Gifford, you're slipping. That's an easy question to answer. The answer is yes. We were very lucky in the timing of when we launched 5 years ago. The corporate governance reform program, which we've touched on, but is the process by which the government is putting pressure on companies to improve their balance sheet and capital management, was already beginning to yield results. 5 years later, that is accelerated further, and they're really feeling a lot of pressure now. So thanks to Mr. Yamaji and his colleagues, we believe that this situation or this opportunity is really improved, but fundamentally unchanged. We will continue to engage with our portfolio companies. There is still over 40% of all companies listed in Japan that trade below book, and they will have to do something about that in the next few years, and it won't just be us saying so. So yes, we think that this has really only just begun, and there is a lot of life left in this. There are still hundreds of companies that we can be engaging with in the small and mid-cap part of the market. And as the fund gets bigger, and it has been growing, Over the last couple of years, we've been lucky enough to be chosen as the rollover vehicle for two failing Japanese investment trusts that we were able to incorporate into our fund. So we started at 100 million 5 years ago. We're currently slightly over 375 million. And as we continue to grow, we will be able to move up the scale, if we wish, towards more mid-caps, more companies like Fuji Media. But the opportunity set is still there and as good as ever.
Well, thank you. We look forward to hearing about more interesting stories going forward.
I look forward to telling them.